This is a Stock Trading Reality Podcast, episode 195.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. One of his biggest pet peeves in the market are trading halts. Play trader.
I guess I don't want to speak for our esteemed co-host Ches here in regards to trading halts, but Ches, I guess before you hear my opinion on trading halts, let's kind of turn this around. What are your thoughts on trading halts?
I think that the government and any regulatory body needs to hold my hand during turbulent times because obviously I don't know what to do for my own good. Absolutely not. I think that's a bunch of crap. I think it actually creates more harm than good for essentially trading halts. I feel like a lot of people get trapped on the wrong side. Whether or not they should have been in that trade is irrelevant. But I think circuit breakers actually cause more problems than they're meant to keep safe.
So there we go. I don't know if it's pet peeve. Would that be an accurate description? I mean, would you say that they're one of your pet peeves
it's a big pet peeve of mine, just like the PDT rule. I think those halts and PDT is just absolutely crazy to try to enforce on people. It just makes life more difficult. It's as simple as that.
Yeah, no, I agree. And so there we go. None of that was scripted. The fun fact, pet peeve, and I'm fully with Trez. I understand the intent, and I understand that the government's trying to be, the knight in shining armor. The problem is a lot of time that knight in shining armor falls off and squashes the maiden who is in distress because, you get into a trade all of a sudden. If you're listening, like, what are these people? What do you mean a trading halt? You could be in a trade, and then all of a sudden it could just stop trading, and then all of a sudden, so let's say you buy at 10, for example, and then all of a sudden it just stops trading. It could theoretically open up at $8. You're thinking, well, how do I get out? Well, you can get out and you can sell for $8 now. Well, that seems kind of that's why they're quite it's just over regulation as far as I'm concerned. But I don't like halts, and they do so. Have you ever had one where? Well, first off, have you ever been trapped in a halt, Chaz?
I've only been involved in one halt, and that was relatively early, and I actually came out unscathed. But I assure you, since I've been in the community for many, many years now and watching them happen, you're not always as lucky as I am that it'll actually open up somewhere around the price that I was a buyer. So, yeah, just like you said, I've watched a lot of people kind of get hosed where, it opens up down 30% more than it was just at, and it's just at that point, you pretty much have just gotten hosed. So yeah, I've only had it happen to me once. So I know it's happened to you a lot more than that though.
Yeah. I mean, it's happened to me, and I've had it work out where it's just, so to flip my example, I buy at 10, it halts, and then all of a sudden it opens at, let's just say 12. And you're like, wow, that was an easy $2. So, it has worked out in my favor, but I just don't like control being removed from my hands. And that's what happened. That's what a trading halt is it's control taken away from the traders. And then all of a sudden, you're literally at the mercy of, I really don't even understand how they determine where it opens and all that. I would assume that there's, the brokers and stuff and the algos are sensing pressures from different areas, but it's a mess. And I don't know, if you're some sort of like government congressman that happens to listen to Ches and I, first off, we're honored. But second, maybe bring that some sort of bill to try to, I get it on markets. So if the entire market is just cratering, then okay, I can see a circuit breaker. But individual stocks, just let things trade. But do you have any more you need to say on that, Ches? Are your annoyances, have they all been flushed out?
I find it unfortunate because we're firm believers in using stop losses in all trading. There's never really a reason to not have a stop loss. I just feel bad for the people who essentially are in a stock that gets halted and say it gaps down below their stop. They get completely wiped out of that position for most likely a decent sized loss, especially if it's well lower than they wanted. And then say it was totally a short-term correction and goes right back to where it was prior. That's what peeves me. It's essentially those people just got fleeced for being responsible folks with a stop loss. But yeah, I'll hop off my stool stool now.
Yeah, no, that's a good point. I hadn't even really necessarily thought about that, but that is definitely more than valid. But I don't know what we're going to title this, but we are going into experimental territory, listeners. As always, your feedback is appreciated. Your feedback is welcomed, and your feedback is definitely wanted and desired in this situation, as there was some pretty big news that occurred a couple of weeks ago, and I thought, you know what? Let's just try kind of a current event type podcast, and who knows where this could go. Maybe we can bring in guests, and they can, get involved with Ches and I, and just give our thoughts on things. But I don't know. Maybe people will say, yeah, let's just stick with hearing about people and their journeys. Although what really spurred my mind is that we're kind of going along with people's journeys in just a very, very bad way. And I think that there's several learning examples that while we're not necessarily talking to any of these people, we're all just outsiders kind of looking in. I think by looking in and looking at these people's journeys that have ended, unfortunately, quite in nasty fashion, there's maybe some learning we could do. So I guess what I'm wondering, and what hopefully we can accomplish, and then I want to hear from you as listeners, is by kind of talking about current events in this form, is this another kind of, angle to look at a journey? And I say a journey because, like I said, it's not like we're going to talk to any individual, but more so kind of high level type dynamics as far as journeys can go if you allow them. And, so that's kind of the goal here. It could be a failure. I don't know. For disclosure's sake, and, what I think would be a theme is none of this is scripted, other than the fact that I gave Ches the topic of conversation, and I said, hey, let's talk about this. And so I don't know if he's going to disagree with my points. Maybe he has brought all sorts of, he doesn't necessarily know what I'm going to say, but who knows? Maybe Ches and I will break up right now. I don't know what's going to happen. None of this is scripted, but my goal here is I'm going to just kind of read through a portion of it, and then, Ches can kind of weigh in, and, I'll weigh in on things that stand out to me. But in a nutshell, there was, was it a hedge fund, or what exactly, how would you classify this, Ches? What exactly,
it's kind of, I think it's interesting because I was trying to find a word for what they technically are. It seems like a managed portfolio of sorts, but everybody has their own accounts at this, so it's not like you give them your money and then you get, shares of it. So it almost seems like they were managing people's accounts, and multiple accounts, not just regular accounts, but IRAs and a lot of stuff. So they just seemed like custodians on folks' investing accounts, from what I can tell.
There you go. I think I like that word. They're custodians. So you hand them your money, and you get an account number, but you don't do anything with the account. They do all the managing within the account. Is that essentially?
Yeah. So it's the opposite of self-directed. Somebody else is making decisions for your account. But yeah, that's I'm pretty sure it would just be kind of considered like they're just the custodians of your account.
Yeah, maybe it'll be somewhere in some. The funny thing here is, before we got started, I just ran so option sellers. Maybe you've heard of this catastrophe that occurred. Formerly optionsellers.com. If you go to their site now, all you have is like some contact information. Their site's been wiped clean. But if you just Google option sellers, all the paid ads right now are from attorneys, people that are filing class action like suits against them. So I found that, hey, God bless America, God bless capitalism. But boy, the law firms have jumped all over the Google AdWords. So if you are searching on Google option sellers, look up at the top of the page. And I want this to post relatively soon. So now if you're listening to this in like a couple years from when it's posted, don't waste your time. But if you listen to this within the next, several weeks of when it's posted, maybe you can see if that's still out there. But one of the law firms, I guess, the Investors Watchdog is what this one is, but there's several of them out there. But these people, like I said, I'll use Chez's word, they were a custodian. They took people's money, and now things are all gone, as in their money is all gone.
Oh, they're more than gone.
Yeah, I was going to say. And not only is it gone, but these people owe more money. So I'm just going to read through this. And this is, like I said, from a log firm. The title is just optionsellers.com investment loss recovery. So catastrophic loss event on November 15th, 2018, optionsellers.com notified its investors in an email entitled catastrophic loss event that it not only lost all their money, but that they would also owe money to International FC Stone for margin calls. According to optionsellers.com, they also lost a substantial portion of their investors' assets due to a naked call position in natural gas and a naked put in credit put in crude oil that, according to optionsellers.com, was so fast and intense that it overwhelmed all risk measures in place. So, Ches, I'll since you're the option farmer here, I'll walk listeners through it in case, because they probably think this thing's getting really dirty. I'm all of a sudden talking about naked puts and stuff, but what exactly was this naked call? What exactly is a naked put that they had put on? So clarify that for listeners.
So essentially, we had a lot of videos that talk about if you go long options versus going short options. So if you go long, say I buy something and it costs me $100, the worst that I can do is lose $100. Now, if I short an option, say I get $100 for selling you that option. If that option goes against me, theoretically, I could be out $1,000, $10,000. I could be out my entire account. I could even have a catastrophic loss event, happen with that. Essentially, it is just, you are selling someone a bet and say you're wrong. You have all the odds. You can have all the odds in your favor, but if some kind of event really goes sideways and you don't have risk parameters in place, you could be on the hook for much more money than you have. So it's pretty much, if sure you're the casino, but if somebody hits that multi-million-dollar jackpot and you don't have enough money to cover it, that's essentially what has kind of happened for this stuff. But overall, the way they were trading is it seems like their risk parameters were quite low, and they were highly invested in kind of two things. They weren't hedged by any means, which I think is just absolutely insane. But essentially you can just be on the hook for a lot more money than you kind of put up to start.
Absolutely. And maybe now if you're listening, well, first off, congratulations if you're thinking this, because, hey, you actually pay attention. But maybe you're saying, wait a second, Ches has talked about in the past that with advanced options and options trading, you can limit, you can say, I'm only willing to lose this much. And you are correct. So that's why I say congratulations, you've listened and you have comprehended properly. But that's where this naked turn comes in. Naked, when you're talking about options, means that, like Ches said, you could lose 1,000, you could lose 10,000, you could have a catastrophic loss event. So naked is where things have gotten very, very risky here. So by no means is, if you're a first-time listener, or Ches and I throwing options under the bus, advanced options under the bus. Absolutely not. We are just, there's going to be more learning lessons that come from this, but that is what's going on here. They were using options in a manner where there was unlimited risk, and this, came back to bit them. So to pick back up with this description by the law firm here, it being, the optionsellers.com, then informed investors that they have a debit balance in their accounts, which they need to bring back to zero by paying International FC Stone the difference. So, in addition to trying to process the news, all their money is gone, they also have International FC Stone demanding they pay the money they owe for its margin calls. Many investors owe hundreds of thousands of dollars in margin calls and do not know what to do. The attorneys at Chapman Albin have reached out to FC Stone on behalf of their clients and demanded that they cease collection efforts and that they cease all further communications with their customers and communicate with Chapman Albin attorneys directly. And then this goes on. Ches, this is, I would say, pretty wise. Actually, now this law firm, they're going after the International FC Stone because, let's see, where's the number? They had $30 billion in revenues last year. So, I mean, if you're going to sue somebody, you might as well go after the people with the money. So I'm not sure if all the law firms are doing this, but this company was. So that's pretty wise, right? Go after the people with the actual deep pockets.
Yeah, absolutely. And especially, I mean, they were talking about, they had over 30 billion in revenue last year. So it's not like they weren't raking money in from their customers just in fees. That has nothing to do with their performance. That is just in fees alone, which is insane.
Yeah, that is pretty crazy. Man, I don't want to go this. We won't try to go political. I mean, at the end of the day, you kind of got to look where responsibility is. But I mean, in defense, I think it's somewhat of a. I mean, I get the business model from the attorney's perspective. Let's go after the people with the money. But I don't exactly know what International FC Stone is doing wrong by saying, hey, you owe us money because you lost our. I guess that's the good talking point here, because they didn't lose their money. This optionsellers.com lost their money, but they're the ones that gave optionsellers.com their money. So
that's the problem right there, is that it says they technically failed to know their customers. And one part of this is you can't actually, it's only recently now that there are certain funds and places where you can trade, say your IRA or any kind of retirement funds on margin. For the most part, that's just never been allowed. And the reason why that rule is in place is to pretty much save people from blowing up their retirements. There are a couple ways to do it now with futures and options, but it's you have to jump through some hoops. You got to go through some paperwork. It says here that optionsellers.com was pretty much managing people's IRAs and using it on margin. So you can't really do that. But the thing is that FC Stone should have been looking into it and being like, hey, I realize that you're a bigger conglomerate and you have this pool of money or whatnot, but we need to kind of look into what you're actually doing with it. So trust me, I'm never big in advocating for, give me, your blood type and your social security number and your firstborn child, all that stuff to kind of be able to trade. But at the same time, the laws are the laws currently, whether we agree with them or don't. That's just kind of the rule of the land.
Yeah, no, absolutely. And on that point, it sounds like, and for Ches and I's disclaimer's sake, this is all speculation. We are just going by what we are reading. So none of this is facts. This is just all, what's the legal term? This is just speculation right now. This is just, I suppose everybody is innocent until proven guilty. But the law firm here is using quotes. So I'm assuming this has been said. But to keep on going with this, but that the claims against optionsellers.com and its principals, Chapman Elbin attorneys are also looking into potential claims against optionsellers.com and its principals, James Cordier and Michael Gross. Tampa-based optionsellers.com touts itself as premier and highly experienced commodities options trading firm. The firm's president and head trader, James Cordier, explained in a recent interview. So this is where things get a little shaky and why I don't necessarily fault I don't fault the people that maybe handed over their money, but again, there's going to be some learning lessons here. If you're new to the show, maybe if you're not new to the show, I should say, you probably know where I'm going to take all this. But this is where I will kind of back off and be like, all right, I can kind of see the poor little sheep when they're being told a certain thing. But like I said, the firm's president and head trader, James Cordier, explained in a recent interview, and I quote, our goal is to take an aggressive vehicle and manage it conservatively. So Ches, is that I'm not a linguistics expert, but I feel like isn't sandpaper, what's that called? An oxymoron.
Yes.
Isn't that kind of an oxymoron? If something by definition is aggressive, can you manage it conservatively, or am I overthinking this? And feel free to disagree as always. But isn't that quote a little, I don't know, sleazy? Is that the right word?
It's just lip service. That's all it is. So taking an aggressive vehicle. So here's a great literal example of it. Okay, I own a Lamborghini, but I drive 5 under the speed limit. That's taking an aggressive vehicle and managing it conservatively. If I take a Lamborghini and say I'm managing it conservatively, but I'm doing triple the speed limit and I wrap it around a tree, that's just lip service. That's just BS. You were doing nothing conservative about it. So that whole thing, I fully agree with you, is an oxymoron. there is no risk parameters are risk parameters. And, I don't care what the product is. It could be futures. It could be options. It could be equities on a bunch of margin. Risk tolerances and risk profiles are still the same. There is no reason ever, and this is just me speaking from my own portfolio, that you should not be able to have mechanisms for defense. This wasn't just this happened overnight while everyone was sleeping and blah, blah, blah. You all have no money now. It wasn't this. That's not how it went. This was something that progressively got worse until the point where they're like, well, all your money is gone and you all owe us money. So no, that whole thing is, taking an aggressive vehicle and managing it conservatively that's just BS. I'm calling BS on it.
Yeah. And to kind of piggyback off of your original example, you have a Lamborghini and you're going 5 under. That's true, but that doesn't mean that something crazy couldn't happen where a tree all of a sudden just falls off and crushes the Lamborghini. So, and that's why, to me, it's just, yeah, it's aggressive, but by definition, you can't manage it conservatively, because they go on to say, which Ches and I already talked about, that the whole naked thing, because they were trading naked options, sometimes external factors happen, and you can try to be as conservative as possible. You can go 5 miles under the speed limit. So, that's a great way to look at it. But then all of a sudden, if some tree just decides to, fall on over, kind of it's just like, then what?
It's a 1 in 1,000 event, but it can certainly still happen.
But, and then what else did I find? Let me pull up this too. Just to kind of, because like I said, I want to defend kind of the people that handed their money over. But another person, a lot of people are writing about this, so I don't want to come across like Ches and I, nobody else. A lot of people are out there chatting about this, but another article person, they captured some stuff before there we go. They captured some stuff before the website went clean. Like I said, if you go there now, all you see is like some contact information. But so just kind of, like I said, this is all speculation. Maybe this guy is the nicest guy ever. I don't know. Maybe I'm way wrong. It would not be the first time. But this person claims in their article that on the website before, like I said, it was wiped clean. Once you're in, you're one of our family. One of us, one of the elite. You're an option seller. Oh, well, isn't that nice, Ches? You're one of their family. Gosh,
I feel so welcome. I'm so happy. I'm so happy to be part of the family.
And the article goes on to say, he claimed, he being, the option seller site, to truly invest your funds like you were family. Whew, goodness. That's how they would invest their family's funds, huh? In these unlimited risk.
I feel like my grandma and grandpa would beat me if I took their money and then told them they owe me more money. But, maybe their family has got a different dynamic than my family does. I don't know. But, it's a little nuts.
And I wish that, I'm sure they wiped their website immediately afterwards, but I wonder what some of the claims they were making in terms of expecting X percent per month, or did you have any idea on? Let me ask this: had you ever even heard of optionsellers.com before this whole fiasco?
Yeah, I definitely did, but I didn't actually realize.
So they were pretty big then?
Well, I got hit with, my Google phone, unfortunately, apparently listens to everything I say all the time. So it knows that I talk about options and whatnot whenever I'm talking about trading. So I get hit with articles about pretty much options and whether, people who make big options bets, essentially buying or selling. So I knew what it was, but I thought optionsellers.com, I didn't realize they actually managed people's money. I thought it was like a newsletter type thing where people pay and they get like a report once a month and, that more older school type of stuff. I didn't realize they actually were managing people's money. I did not know that.
Yeah, that's I'd never heard of them at all, but I can see why you would think of a newsletter. And I guess what I'm trying to set up here is that there's a lot of gray area, but at the end of the day, Ches, and this is the whole idea here, is that, if you want to get into the markets, really at the end of the day, you got to just, it's on you. You have to take personal responsibility for yourself. And I realize that as a listener, you could be saying, well, what are you talking about? A lot of people just give their money to a financial advisor, and And you know what? You're absolutely right. My parents give their money to a financial advisor, but these financial advisors are not out there, and I quote, claiming to use aggressive vehicles. They are, hey, let's diversify the funds. Hey, let's diversify within mutual funds themselves. So like diversification among diversification. There's a huge difference between, you know what, I want to be hands off, but I still want my money to grow. So I'm going to give my money to a financial advisor that's, going to be spreading around, through
Let's get you in some equity stuff that follows the market. Let's get you into the bonds market when things are getting turbulent. Let's get you into, foreign currency markets that are, looking like an opportunity. You're not all leveraged in say natural gas futures or naked options and stuff like that. You're spread out. You're spread out.
Exactly. And this is also where, and this is nothing new, but this is greed. Greed got these people. Clay, you don't know these people. Well, then how in the world, what made them decide to give their money to somebody on the internet, some website? Because, like I said, speculation on my part, but I can almost guarantee that, you know what we should have, there's websites where you can look up the history of a site, can't you? Like archives, or we should have.
Yeah, something like that, yeah.
Regardless, you can, for you tech geeks out there, if you don't believe me, I would challenge you. Go look this stuff up. But I can guarantee that they were posting results. They were posting expectations. And you know what? I bet those expectations were not, we're going to get you the average 6% per year that the SPY will give. We're going to give you the average 8% per year, which doesn't really sound that good. But I mean, power compounding, hey, if you can do that over time, that's great. But like I said, this is where greed starts to play in, because I'm assuming that the people that handed over their money were like, I don't want 8% per year. I want 8%. Oh, wow. 8% average per month. Oh, wow. They have yields of fill in the blank. So these people were being lured in with these good gains. And I'm not saying those gains were false at all. But with, what's that saying, Chaz? Something about with higher reward comes higher, risk, something like that. Yeah.
Nothing ventured, nothing gained, something like that. But there's a spectrum for that stuff. It's not. This was pretty much pedal to the metal, or doing 5 miles per hour under the speed limit. So, yeah, but it's greed, but it's also. I want to hear your opinions on this. Okay, so I can understand the greed from investors' standpoint, but I want to argue that it was ego on behalf of the head traders that kind of allowed this to happen. And the reason why I say that is, sure, I just looked at the natural gas futures daily chart. There was certainly a big up move. It went up like, 60% over the span of 2 weeks. That was a fast move. Okay. Like I said, even I personally know how to defend against naked positions to pretty much cap my loss. Now the crude oil one, crude oil was at $77, and it has just dripped down from October until it's now the first week of December into the 50s. This was half of the reason why people's accounts blew up, is because they pretty much were betting that oil would go higher, not lower. But my argument is that there was a period from October till this first week of December, whenever they actually went out of business, there was no catastrophic day. It was a move down against them that they did nothing to pretty much mitigate the losses. So it makes me so angry that according to the letter they sent their investors that said all their money was gone, they said that the move was so fast and intense that it overwhelmed all risk measures in place. That is just such a load of BS I can't even begin to explain. I'm looking at the daily chart. I could have taken a vacation in Spain and still been able to check on this once a day and realize that, we're pretty underwater here. We better, cap this or do some kind of defensive strategy. So I think it's an ego thing on behalf of the traders. The head traders that were managing people's money, I think they didn't want to be wrong. Oh, no, I know the odds going into this. It's got a 75% chance of being correct. Ooh. But that one time, part of that 25% that's wrong, instead of doing what you're supposed to and take your lumps and move on, it just pretty much let it dwindle to nothing, actually to less than nothing, to the point where investors actually owe money. So I want to say, sure, it's greed on behalf of people, coming in to have, I want my portfolio aggressively managed by who I think is a good trader. But I also I say it's the ego of the traders that allowed this to pretty much spiral to a catastrophic loss. I think it's ego, because ego always gets people in trouble in trading.
I would say I fully agree. I did not know that. That's interesting. I have not looked at any of those charts. I guess shame on me. I assumed there was a catastrophic loss event, but I was just thinking from the macro perspective. I know natural gas has gone crazy. Obviously, oil has gone off, the cliff. But I did not realize that there was. It's not like it was just. It
wasn't a one-day event, which if it was a one-day event, sure. If natural gas went up 33% in a day, first off, like I said, considering your entire job and business is managing people's money, I would assume they're watching the market intraday. Regardless of that, if it went up, say, 33% in a day, fine. That, to me, that is a big outlier one-day move. But when you have days and weeks and more than a month to manage and defend this and pretty much say, we're wrong. Well, shoot, I don't want to show investors that, we didn't make any money in November. So rather than do that, we'll just let everybody blow up and hope that it turns around. That, to me, it's the ego that kind of ultimately led that to be, pretty much led this fund to go kaput. But I say it all the time, and I know you firmly believe in me. The only person who has your best interest in mind...
No, stop. Don't take my thunder, because you're... Okay, that is
fire. This fires me up a little bit.
No, because I was thinking, I was thinking of the perfect, but you're taking the punchline here. But, you're absolutely right. But what it just dawned on me is, think about what Ches and I are doing. He is throwing up plausible, very logical, thought out, was it ego? Was it greed? What was the true? Well, think about that. We don't know why these people did what they did. Maybe they genuinely thought something. Maybe they were doing it because, like Ches, they needed to post certain gains. Maybe they were just totally oblivious to things. But think about it. We don't know. But you know who does know? You know who is going to, give their position the best chance of possibility? You. Because like Ches was going before I rudely wanted my thunder back, is the person that's going to have your best interest at heart, where you're not going to have to debate about, I wonder if it was this, or I wonder if the, optionsellers.com, you're not going to have to debate any angles about somebody else if you just decide to do it on your own, because, well, you're not going to have, there's nobody that has your best interest in heart other than yourself. And so, yeah, was it ego? Was it negligence? Was it just, I don't know, but does it really matter? If these people would have just taken it go ahead.
If people think that we're just totally bagging on anybody managing your money. We're absolutely not doing that, okay? Financial advisors, wealth managers, all that kind of stuff, they're paid to do certain things. So, but I'm going to fully agree with you. If you kind of went into this, I don't know. I have no trust. I'm very, very leery about other people doing anything with my money, okay? Trust me. I know, okay, you got a credential. You've been in the industry for 30 years, whatever it is. I'm telling you, though, I had to work hard for this money. I would like to know where it's going, why it's going. But here's a difference, I think, that, not everybody sees the same. Not everybody has the same viewpoint regarding this. I used to love blaming external things for my shortcomings in life. Oh, I didn't get an A in the class because the teacher hated me. Any kind of garbage like that. Or, that trade went against me because of those silly market makers. It's so much easier to pass the buck and blame somebody else. And then you can always point, and you never have to take a hard look in the mirror and realize that you screwed up. I have grown to love knowing when I make a mistake and just flat out owning it. And instead of making myself feel like a little person who's really, dumb and stupid and whatever, all this self-doubt talk, I look at losing as like a learning opportunity or a reason not to do something again. But I'm fully responsible for my kind of destiny. That is something I like. I like to have that control. The market and everything is uncertain, but I assure you, I can cap my losses. I know when things are very poorly, and I know if something goes extremely wrong. I know if I have a catastrophic loss event in my personal portfolio, it's my fault. There's nobody else to blame but myself. So that's, I almost think that, when people have other folks manage their money, or, oh gosh, I'll just give you my account and you do great. Guess what? You lose money on it. They can just point the finger and say, you did it. I didn't do anything wrong. It's not my fault that I gave you my money, even though in reality it is their fault. But I think people just like to put the blame elsewhere, or look at Wall Street in general as just this evil place and everyone's just out to rob you. So I don't know. I'm off on a tangent at this point.
Well, that's fine. Tangents are a great thing here. What just kind of dawned on me as you talked is, I think that the issue here is misplaced greed, because there's no doubt about it. These people were greedy. In fact, I think I can make a strong argument. They were more greedy than most people, because not only did they, think about what it would take to give your money to somebody, to essentially strangers on the internet. It would take two things. One, it would take, all right, well, show me that you can get results. But two, it would be, you want those results. So to want results that I can guarantee we're pretty probably crazy, that's a double whammy of greed. But what Ches and I think would argue is, take that greed of wanting above average returns. There is nothing wrong with that at all. Don't get me wrong. That's why I got involved. That's why Ches got involved. But who got involved? Me. Who got involved? Ches. Because we are greedy in the sense of, well, I think I can do better than that. I think I can manage and make a little bit more. Again, we're not talking about insanely better where we're driving around in our Lamborghini smoking cigars, but I think I can do better than fill in the blank. That is a little bit of greed. That is a little bit of, now you can also call it confidence in yourself, but why don't you take that greed and just, do it yourself? Because as we've talked about, if you do it yourself, well, then all the blame is on you, like Ches was just talking about it. And there's nobody else that's going to take it more seriously than yourself. Well, I don't have enough time. So you're going to give it to some stranger on the internet that's being super risky, and they're promising that your greed is now being misplaced, and you're allowing some, well, I don't have enough. If you don't have enough time to do it yourself, then you don't have enough, your mindset is not where it needs to be, because now you're just being a greedy savage in the sense of, not only do I not have enough time, I'm still going to just give my money away because it's going to grow that much quicker. You can't have your cake and eat it too. If you want to be totally hands off, fine. You have to go the super conservative route, which is hand your money to a financial advisor. They'll put it in bonds. They'll spread it around blue chip companies, and they'll try to match. Or you can just buy an index fund and just match whatever the market does.
Or just do an index fund and just use history as, oh, hey, the stock market generally goes up most of the time. At least the past decade, it's gone in a straight line. But yeah, if you want to be fully hands off, just go for it. But this is not the same.
But you can't be. But you can't be totally hands off and then also get well above average returns. That's not how this works. And when people are saying, and this goes back to the newsletter and the buy and sell alerts and all that stuff. I really wish that I could say, sign up for our chat room and we're going to send you text alerts. And those alerts will tell you when to buy and they'll tell you when to sell. And all you got to do is just make sure you have internet connection out on the golf course, because when you get that text, you'll be able to just make sure that you're there to sell. Oh man, that sounds so beautiful, doesn't it? But I'm sorry, you can't be that hands off and then expect to actually have success. And what we are doing, if you are choosing to trade, if you're choosing to get active with your money, this is not conservative. Trading is not a conservative strategy. This is an aggressive strategy. If you are buying and holding, hey, history proves that'll work out fine. But you're not going to have any sort of gigantic returns. Like if you're getting more aggressive, now of course aggressive in a very rule-based system, which is what we preach around here. But the idea here is that these people, I feel sorry for them because they were misled. Some of these quotes, yuck. But why were they even willing to give their money to somebody on the internet in the first place? Because they wanted to be hands off and they wanted awesome returns. That's just misplaced greed. If you want awesome returns, great. but you got to do it yourself because nobody's going to care about it more than you yourself. And that way you can only blame yourself. I think that pretty much, does that summarize your position?
Yeah, absolutely. I fully agree with that.
And
if you want to do 2 times better than the market, you better be prepared to put in 2 times the amount of effort than, the everyday Joe that just kind of, pops on his little app and sees where the market's at for the day. If you want to beat the market by 2 times, and I'm not talking about just, leverage yourself 2 times larger than normal. You got to put in the effort. It's not, if it was just as easy as like Clay said, I'm on the 7th hole going for a putt and I get a text and, oh yeah, I'll just buy this. And oh, sure enough, by the time I get to the 9th hole, I'm up, 30% on something. If it was that easy, everyone would do it. That's just not the reality of pretty much. Easy come, easy go is probably one of my favorite sayings because nothing could be more true. It's not. It requires effort, and with hard effort, you get results.
And I may be wrong here, so Ches, you correct me if I'm wrong, but there was that much more risk because these people's money was pooled with everybody else's. So let's just say that was just you, Ches, and you took this trade. You would be able to manage it just from a liquidities perspective much more efficiently than what they would be able to manage it. Or is the market plenty liquid where it, does that make sense what I'm getting at here?
Yeah, no. I fully understand what you're saying. So you're totally right in terms of it is much easier to quote unquote unwind a position of, let's just say you have a $250,000 account. It is much easier to, gosh, if you have your whole account in one thing, whatever, bless you. But if you do, so say you're fully 100% in some kind of thing. It is easier to unwind a $250,000 position than say, a $5 billion portfolio that is highly, you can't just market sell a couple $1 billion worth of stuff onto the market. You will just destroy the market.
Okay. And I don't want to lose. So let's say your $250,000 is part of a $5 billion position. You're saying that makes that's a whole new ball game. Whereas if it was just you and your $250,000, that is much easier to manage than if your $250,000 is part of a $5 billion position. Am I understanding you right?
Yeah, absolutely. Because you could be unwinding it in $25,000, $50,000 at a time versus this fund. The fund would have to be doing that like every minute of the day to get out of even a portion of their portfolio. So, and it's, so we always talk about what we do in the market is we kind of follow, big money's footsteps, all that kind of stuff. It is much easier to see when somebody with billions of dollars is underwater and is getting, bent over the coals, essentially. They're in trouble. And I'm telling you, any big traders and other firms, they pounce. They're going for the kill shot at that point because they realize you're off sides. And whatever you have to do, whether you have to buy to close if you're short or you have to, sell to close because you're long, it's going to have an impact and people are going to try to essentially – the market is a battlefield. They're trying to inflict pain on you mainly because it is a zero-sum game. Someone is going to win and someone is going to lose. And if you are on the losing side and you are a lot of money – you're pretty much trying to take advantage of this person getting out of a losing position. So yes, it is just so much easier to unwind and manage a personal portfolio where, you have to be working with a sizable account to start worrying about liquidity. And granted, I know you could buy 10,000 shares of a lot of stocks. You still don't do that. You could, but even if you did, buying 10,000 shares of something, for the most part, any of the bigger names that we generally trade, you're not going to move the price extremely far. It's just not a billion dollar position.
Right. And that's to your point about Ches is not wearing a tinfoil hat when he says that there's other firms, there's other people out there that when they see big money, I love the football analogy, offsides, they want to make sure a yellow flag gets thrown and they want to crush you. And regardless of what you think about the guy, Jim Cramer, he stock market addict, or the confessions of a stock market addict. He talks about his hedge fund days, and he talks about exactly that, where if other funds, if other people, if other competitors smell blood in the water and they know that maybe you're short or that you're in a bad position, they will do whatever possible to make that bad position into a worse position. And then they will keep going and try to turn it into a catastrophic position. So, Ches, that's another great point that I hadn't even thought of is not only is it just hard from a liquidity perspective, but now when you're setting off alarm bells for other firms and other people, yeah, you could absolutely get crushed, which brings about my roundabout point of, at the end of the day, it's actually less risky to just put in the effort to learn how to do it yourself. Because if something goes bad, well, at least you're in a position. Now, this is all under the assumption you've invested into your education. You've gone through, you've paid, you've gone the proper steps. But at least you're a spot where you can kind of just take your lump, move on, and not be stuck where, well, great, I got my money pooled with a bunch of other people's money, so now the efficiency has gone down. And I get it, well, you can make up for that efficiency because that person is super knowledgeable and look at all their results. Yeah, look at all their results, but you got to keep in mind the flip side of things is that they're generating those results in a very risky fashion. And because of this criteria that Ches and I just talked about, in the event when something goes wrong, it's going to go that much wrong because you have all these things now working against that. So I get it. You may be thinking, well, maybe that's not as efficient, but at least their knowledge will overcome it. Why can't you get knowledgeable? Oh, that's right. Because you want the best of both worlds and you're being lazy and greedy. That's not how this works.
I have to catch up on Game of Thrones. I don't want to learn about anything or do any reading.
There's nothing wrong. If you don't want to learn, hey, my dad, my mom, they'll talk at high levels about the stock market. But if I try to get, into the nitty gritty, their eyes glaze right over, and bless their hearts. That's fine. I get it. This stuff isn't for everybody, but you can't. But my parents are also saying there, but you know what, Clay, we found this, such and such online, and we're going to give all our money to them because they're showing big gains. And I was like, you know what, Mom, Dad, those big gains, I'm not even going to refute those, but have you considered how exactly they're getting those big gains? It's going to be in a much riskier fashion where if something occurs, there could be a catastrophic loss event. And Ches, I'm not going to lie. I never thought we would go this long, but
I didn't either, to be honest with you. I was like, this will be 35 minutes, but
that was
there's a lot of talking points for sure.
Yeah, I thought this would be 30 minutes, but now we're approaching 45 minutes. There's as of the recording of this, there's a live webinar that starts pretty soon. But I mean, do you have any? I think we got our main points across. At the end of the day, what we're saying is, if you want to try to get above average returns, that's great. But you're going to have to do it yourself. You can't be listening to people out there. You can't be, handing your money over because there's definitely risks that are associated with it. And one final time, apples and oranges. We're not talking about your financial advisor that's going to put you into mutual funds and all that sort of stuff. That's great. We're talking about the people that are proclaiming big, showing big returns, because that implies they're taking some relatively big risk behind the scenes. Just no matter, despite how, what was the quote? Aggressive vehicle, the
aggressive vehicle managed conservatively.
Conservatively, absolutely. So did you have any final thoughts or opinions or things that you wanted to talk about?
I mean, I just think it's a more overarching theme than just the market in general. As you get out of, I'll say life is just an overarching thing. You get out of life what you put into it. If you want to be the best race car driver, I assure you can't just go on Udemy and buy a $10 course from a guy that says, here's how to be a great race car driver. If you want to be extraordinary at something, if you want to beat the market, if you want to, whatever your goals are, you get out what you put in. So you need to make an effort for just about anything in life. So if you think you can just follow some guy on Twitter and he gives you buy and sell signals and that's the ticket to Easy Street, I assure you it's not that simple. I promise you, I thought it was that simple when I started, just like many other people have. But yeah, it's totally possible to learn how to manage your money. And I'm not even just talking about the stock market. Personal finance is a big deal for us as well. It's just you get out what you put into it. You have to make an effort. So anything you do in life, if you do it half-assed, censor me if you need to, Nate. That's the results you're gonna get. So yep, this is a very, very. I love kind of talking about stuff like this because it's just there's no shortcuts. I'm sorry to say, if it sounds too good to be true. I'm not saying that they didn't get extraordinary returns, but here we are talking about a catastrophic loss event. So great risk, great reward. I'm not willing to put it all on red and black. So I'll continue with my conservative management of my own portfolio.
Yeah, absolutely. And, and this is whether or not you buy any of the trainings that we offer, whether or not you subscribe to the Inner Circle service, even when it's just $100 a year. That's not the point at all. You know what? Realize perspective. You have to keep expectations in line with perspective, and you thinking that, like Ches said, buy and sell alerts. Let me give my money to this person because they're promising these results and they show them these results. And like I said, those results, we'll say they're even real, but you have to dig deeper. How are those results being generated? Because you never know when something could backfire, and then because of the liquidity issues and the other firms seeking to destroy you because maybe they're seeing the bigger positions. It's just better take the bull by the horns if you want to do it. If you don't want to do it, no judgments on our part. You're like the vast majority of the population, but you can have your cake and eat it too, which I think is the moral of the story. So, Ches, what'd you think about this? I had a good time. I mean, we're sitting at 50 minutes now.
Yeah, definitely. But I mean, we'll probably do these sporadically as events like this happen. This option seller is going under and having, multiple billions of dollars gone, and essentially all your money is gone, and now you have a bill that you have to pay back FC Stone. That definitely was a standout event in the industry, and I get it. Funds go under all the time, but little hedge funds and crap like that, where somebody used their trust fund money and blew it up, that doesn't surprise us. But when you have this amount of money with mom and pops and everybody kind of losing it, yeah, that's a current event worthy podcast, if you ask me.
Yeah. So if there is something out there that, to steal Chez's quote, podcast worthy, some sort of current event, let us know, whether that's through the site or whatever. And yeah, maybe we can do something on it. Or maybe we're just like, I don't like your thoughts. I want to hear about other people's down in the nitty gritty. And that's fine too. That's why we're looking for feedback. So with that, I'll end with feedback, constructive criticism, suggestions. We're all ears here. We're always willing to try. And when we preach, you never know. You got to get out there and do it. Well, we're doing that right now. This could be a total train wreck, but maybe there's some potential here. There's only one way to find out. Before we go, though, a few things. First off, if you're listening to this on YouTube, make sure to check out the rest of the channel. There's a lot of other content there. There's live trade videos. There's quick tip videos. There's a vlog. There's all sorts of stuff. In fact, there's one vlog, just since we talked about options and Ches, where last time I was out in Colorado, I followed Ches around, and we did kind of like an all-day documentary, if you will, where Ches explained how he manages his options positions from his phone and everything like that. So that's just one example of what's on the vlog there. So make sure to check out the YouTube channel as a whole. If you're listening to this on iTunes or any of the other podcast players, make sure to subscribe. And especially on iTunes, if you could leave us a rating, some feedback, that helps us out, and that goes a long way, and we really appreciate it. And then finally, if you're listening to this at claytrader.com on the show notes page, make sure to click that share button, leave us comments down below, please, especially on this one, leave us feedback, and we will read those, and we will be very grateful for it. And yeah, if you have any questions, we'd be willing to respond back. We pride ourselves in being interactive with those that reach out to us. So that is our foray into current events. And Ches and I were very interested to hear your feedback and thoughts on this. But either way, we will be back next week with a regular interview with a fellow community member. So until then, take care.